let's first take a look at Bitcoin here. So just making sure my live is good. Anyways, all right, so Bitcoin right now. So Bitcoin, what's Bitcoin doing? It's just simply up for the day, but it's nowhere near shortable level for me. It's nowhere near support level for me. So if it was to go down to 109 550, I would say, then I would go long there. So until this line here, this trend line here is broken and with confirmation, meaning if it were to close below this trend line, but then the next day it confirms, which means it should have a follow-up move to the downside, then we could have more downside to go. So this is the measured move target, and this is the head and shoulders that's forming here. So this would be your left shoulder, the neckline, this is the head, and now it's either forming the right shoulder or it could just be chopping sideways here. So the level to beat for the day or for this week would be 116, followed by this area here, around 117. We also have the 50% retrace at 117 435, and then these areas here. So if Bitcoin could get above 118,301, or in the next few weeks it could, this line here is upsloping, so it will be 119 494 the longer Bitcoin stays here. But at some point Bitcoin is gonna have to either break out or break down. But right now, if it stays down here, there's more chance for Bitcoin to actually break down and complete this measured move. So this is also a measured move if it doesn't form the right shoulder. It doesn't have to necessarily, but the more you hit the trend line, the more likely it's gonna break at some point. All right, so now let's go ahead and take a look at silver. Silver is probably one of my hot picks for this year and going into 2026 on the short side, actually, because I was long silver not really a long time ago. That was just last year. So I think sometime in April or something like that, May, that's when I bought my first I think I bought a kilo of silver. Yeah, so it was like 26 per ounce at that time. And then around August, I think I bought another kilo, so it was back again at 26. And then look at where it's at now. Pretty much already 100% gain since I bought it. Yeah, look at that. So and also, technically speaking, if we look at the RSI, every time the RSI is all the way up here 80 above 70, that's not a good sign. So at some point this is gonna resolve itself to the downside. So just like over here, what we saw here, this was down here, this was like a 17% pullback. Every time we hit the upper end of this channel, it had like 17% pullback. So who am I to say that it's not gonna have that again? And this line here, this is actually major tops. So we've had this back in 1980 when it topped after major rally. So it rallied up pretty much from this low here from 1975. It rallied up like over 1,000% before falling between 78 to 90%. So this was the first flush. Like this lasted for like a few weeks, and then it had a bounce of about 100%. And then look at it go. It went down again until it bottomed all the way back here in 2000. I think this was probably the end of the dot-com bubble. But yeah, pretty much this is what happened back then. And then the other time it reached this high was back here in 2011, around $49 per ounce. So basically from when it bottomed in 2003, this went up to as high, so about like another 1,000%. So that took like from basically here double bottom 2001, then 2003. So it's like took like 10 years for it to get back up here to the 1980s level, and then look at where we at now. So when this thing dropped, it dropped 40% first before a bounce, like a 30% bounce, before going down some more. So the maximum downside for this cycle could be either between 48 to 76%, but in the nearest term, I would say at least 16 to 17% pullback. If we do our measurement here, we could see that a 16% pullback or 17% pullback would take us somewhere right at $44-$45 per ounce. So that's what we're looking at for silver. Otherwise, if it could finally break out from here and then retrace, break out with confirmation and a retrace to 54 or somewhere around 50, 54 or some 53, then this could probably go even higher. Like this is like the bigger parallel channel that connects pretty much the 1980 high, the 2002, 2001, 2003 low. This would be the maximum upside for silver, so around $273, maybe even going up to $314 in the next few years. So we'll see how this unfolds, but right now everything is so extended, so that's why the minor stocks, that's why they're ripping, because they're ripping higher because of the fact that silver is still, has been going up non-stop. And then we have gold right here. Gold is also doing the same similar thing. So if we zoom out to the 1 month chart, we could see how this all kind of unfolded. So back in time here, this is the high from 1980. It went to as high as 875 per ounce before falling 48% and then a bounce, and then ultimately it fell 70%. And then so basically, if you had bought up here back in the 1980s at all-time high $875, and then it went down to $251 by like nearing the year 2000, it took you 20 years. I mean, not just 20 years, but then it took you, because it finally was able to get back up there by like 2008, which is I think probably the end of the great financial crisis. So it actually, yeah, right here, so this was 843, finally broke above that, retrace here 703, and then it started its uptrend from there. So it pretty much took you like almost 30 years to like break even if you had bought it at the top here. But if you had bought from like down here 1999, then you would have been good. So look at gold price now. I bought gold, just about 100 grams of it back in March 2023. So if we take a look here, when was that? March was somewhere around this area here. So it was like around maybe 2,000 per ounce or less than 2,000 per ounce. Now it's over 100% gain. Crazy, right? So but the thing is, at some point this run would come to an end, just like any other asset out there. It's because people are piling into this and not even looking at the charts, not caring that it's so overbought, it's so it's just so expensive right now. They don't care about any of that stuff. But as a trader, you gotta be paying attention to this stuff. It's because, yeah, RSI on multiple time frames overbought above 70, and just look at that parabolic run. Basically this thing just went up in a straight line. Whenever you see something like that, just like over here, we saw it basically go from 2583 back in December 19, 2024, all the way up here to like 3500, and then look at it go. So that's something to keep in mind. And then also, every time I hit this trend line, just looking at historical data, every time you hit this trend line, you get some sort of pullback. Like right here, you got a 36% pullback. So if it was to rally up some more, it could probably go to 64.33, maybe all the way up to $10,000 in the next 5 years. But yeah, at some point this is probably going to resolve itself by pulling back at least maybe 36%, because yeah, it pulled back here. If you take a look, pull back here, first pullback was like around 20% pullback, and then 36%, No, actually, sorry, that was a this was a 20% pullback, and then ultimately it resolved itself by having over about 45% pullback. So at some point, we're either gonna have between 20% to 45% pullback from this level here. So yeah, we could definitely just put that right there. 45%, 20%, 20% here, just to kind of give ourselves an idea how much pullback are we looking to expect from gold. So yeah, same thing here. Back in time, when gold went all the way up after a huge parabolic run from 1976 to like 1980, like 4 years of bull run. It was like a 700%, over 700% run before getting that 48 to 70% pullback. Then from down here, from 248 all the way up to 1936, that was like a 10-year bull market cycle. So yeah, if you take a look here, gold was like only $34-$35 back in 1969, and then look at it go. So it went from $34 all the way up to like $160 in basically 5 years. So that was the first run, and then look at the drop. So if we do a time count here, how long has it been since gold has been on a rip? Pretty much since it bottomed here in 2015. So it's been about 10 years if you do the math. So at some point this is gonna correct, and who knows how low we're gonna go. We could probably go back to where it was, maybe $2,000, or maybe somewhere around here, 2,500. We'll just have to see. But you have your levels, as a technician, as a technical analyst, you have your levels. So your levels would be, let's see here. All right, I'm just trying to adjust these guys here so it makes it look a little bit cleaner. But you have your first level here, 3,500. So if it was to drop to 3,500, that would be a 17% drop. So almost 20% drop. So that would be something to watch. Okay, so gold is also what do you call this? Correlated with minor stocks that do gold. So that's why a lot of minor stocks are ripping to the upside, because gold is still up, silver is down a little bit. And we have now the tech sector. So DXY, I'm actually kind of bullish on the dollar right now. It's just because if we take a look on the daily chart, it's having a bounce right now, and it looks like this was the breakout point. So you just don't want this to be taken down. Otherwise, you'll have to cross this inverse head and shoulder out if it takes this line out with daily confirmation. All right, so let's go ahead and look at the ES. So this is the S&P 500 futures. So the target you're looking for today would be somewhere around here. So this was yesterday's high, 67.67. So if it was able to take that out, then you have this area here around 67.92, followed by previous all-time high, so 68.13. So if it takes out yesterday's high, then you cross off this potential head and shoulders that could be forming here. So this is the neckline, and if you do measure move, so take that basically the high to the neckline, that's a 3.79% potential downside on ES, or the S&P 500 futures. The other thing we want to take a look at is the NASDAQ 100 futures. So same type of deal. It has a neckline formation here. You just don't want that to be taken out. It's because once that triggers, then you could have another 4.6% downside, which kind of coincides with these lows here. So that would be a good, I would say, a good level to watch to potentially pick up some NASDAQ 100 futures, or if you're doing the ETF, then you could pick up the QQQ ETF. And then this is the Russell 2000. The Russell 2000, it was starting to form head and shoulders, but that is now cross off the table. So now what we're watching is these all-time highs here. Um, so this all-time high here, it still kind of coincides with the previous all-time highs that we've had in the past. But this is definitely new all-time high for the Russell 2000, meaning small caps, micro caps, mid caps are getting a run because of that. And then the YM, this is the futures for the Dow Jones. It's still the head and shoulders for this one is still intact unless it could get above the head. So if it could get above the head, which is the highest point in this chart, then we will cross off this potential head and shoulders formation, as this could just be making new all-time highs again. So these are the levels to watch to where to sell or where to short. Where to go long would be the neckline, simple as that. And since it's still pre-market, we could see what's going on. So Apple's up a little bit, and then you have this trend line up here. This is your resistance in the near term. And then for Amazon, yes, this is trading right below this big red candle, which is bearish. So you have these lines here as your resistance at this time. Google, so Google is running up into resistance. I did grab some shorts, ETFs for Google, GGLS. So GGLS is a way to short it. Just buy the shares, or you could get the options. You could also get put option for Google if you're trying to short it, but that is a lot more expensive. So Meta is also running into resistance, but this is just minor. This could get a breakout and go to the midline here, which would still make it look like a bear flag, because a down move and since sideways consolidation is a bear flag, it usually resolves itself by having another measured move to the downside. Microsoft is up a little bit, and then it's trading below this technical resistance right here. This is the breakdown point. So if it were to go up to this the end of the channel, which also coincides with the breakdown point, or the trend line that it broke down from, 526 would be your maximum target in the nearest term. So Nvidia, I also got a shorts for this because it's trading below this big red candle for Friday, which is not good to see, and it's also forming a potential head and shoulders. Otherwise, this could just be bear flagging, which could also bring it down about 6%. And then lastly, we got Tesla right here. Tesla is looking like it's breaking out from this little wedge that it's in. But then we could also do this and be like, okay, now that still looks like it's hasn't really broken out. It's only hit this twice. So once here on Tuesday last week and once yesterday. The VIX, I did get on long VIX yesterday when it went to 1915. And then now it's looking like it's going back down again. So I will keep going long VIX, as this may still, as the fear may still spike up. There's still the rare earths export thing going on. I think China is restricting rare earth export to the US, which can be bad for the tech sector, AI sector, semiconductor sector, pretty much sectors that uses rare earths. And also the fact that tariffs is still slowly taking effect, and more tariffs may be coming here soon. So those are kind of the uncertainties right now, plus the fact that unemployment is rising, inflation is still on the rise. Rate cuts may not actually help because that may accelerate inflation, so they really need to watch out with that. And economy slowing down, people are spending less, is because cost of things are going up. People gotta have to save, rents are still up, stuff like that. Anyways, I hope this video helped you guys in any way. I will be probably going on again tomorrow. Make sure to like, subscribe to my YouTube channel. If you are watching this from Facebook, then I guess feel free to like, share with your friends or family, so they could also be informed using technical analysis, data driven and no bias, no emotions. Basically investment decisions or trading decisions. So I'll see you guys next time. Have a good